Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Friday, September 23rd, 7:21 as I'm starting the video. And as always, please run your player at 1.5x. Futures down across the board. Bitcoin 2%. Oil 3.5%. Equities about 1.5% across the major indexes, and copper down a whopping 4%. So let's dig in. Dollar continues to move higher. I think you can, if you're actively trading this, I think you can move your stops up to this 110.5 region, or anywhere that you want. Real support is well, you're going to get a little support here at 10.5, but then you got a much bigger level at 109, 109.25, something like that. My big call yesterday on TLT to catch a safety bid was totally misplaced. Luckily, I don't think any of you probably even had a chance to get in on that trade, so hopefully you didn't lose anything. And if you had just maintained your short, then you're sitting pretty. So now we've got a gap above. You could get if you got a gap entry here at 106, then the fill will be up to 108 to that major pivot. VIX, interesting day yesterday, was actually down 2%, even though the market was down. I found that interesting, but we're still in a range here between 25 and 29 with an upper resistance layer at 30. If you're tactically trading, keep that on your board and simply look for direction. Swing traders just need to keep the limits of support and resistance in focus. Any kind of break above 29.30, I think you get a big equity down move right now. Just kind of working our way down or working our way up on the VIX, however you want to characterize it. Bitcoin down a little bit, still wrestling with 19,000. I think that's still your major pivot, as we discussed yesterday. If you're not in the futures market, find yourself a Bitcoin proxy ETF, either a long one or a short one, depending on if you want to, go long a short ETF or short a long ETF. I know it's a little bit confusing, but any kind of a break here, there's a big volume over price void back here in the charts. I think it has the potential to move really, really quickly. Oil this morning dropped below this 82, which was the prior low. So if that sticks, you're going to have an open door down into the high to mid 70s. And then your 82 can be your pivot level, first level to recapture on any kind of a bounce. But obviously people are getting worried about the demand side with recession talk ramping up. So somebody in the trading room yesterday asked about gas prices. You basically got a couple things at work. Global supply is what it is, and we know that the emptying of the SPR has been adding to global supply, and those incremental barrels every week has been the catalyst to get gas prices down ahead of the election, right? So we've got 6-8 weeks before the election, and I think you're going to see the SPR releases come to an end right before the election. And we're going to be at the bottom of the barrel in terms of SPR inventory. Literally, it's almost, relatively speaking, almost all gone. So there's not going to be any more SPR to put out there in the future. And then the question becomes, does the government start buying after the election, right? Because the pressure will be off. And then you might have the reverse dynamic where SPR is pulling barrels off the market, which of course makes it a scarcer commodity for the real economy. And then you might see gasoline prices, head north again. And then that all, of course, is balanced against recession risk. If we have a hard landing, a lot of people start losing their jobs, etc. You're going to see oil demand go down. So right now, a lot of volatility in the oil market, trying to balance those dynamics. Our EWG was down 3% yesterday, so that's working. I think this heads lower into the winter months. So now just stay short against 2150, excuse me. Of primary focus, especially if you're loaded to the gills with shorts, are our oscillators down here at minus 90. You can see back in time, we hit minus 100 just, a few weeks ago. And then all back in time, 90, except for COVID, 90 has been an area to look for a bounce. Jumping over to NAMO for the NASDAQ, we're down minus, let's just call it minus 80. You can see that minus 90, here. This was COVID. You have some reversals a little shy of that. So they're getting stretched to the downside. And remember, view it as a rubber band. We are stretched to the downside where you would expect a bounce back, right? You get max expansion. Hard to keep selling into that, and then it reverses back the other way to relax the oscillator. But keep in mind, there's the scenario where the rubber band breaks, right? You're pulling it back. You're going to shoot somebody in your middle school class with that rubber band. You pull it back, and you pull it back. You want to get maximum horsepower, and the darn thing breaks. If the market breaks, and this rubber band breaks, that's when you get the uncontrolled waterfall, and then all bets are off. You put a big X mark over the oscillators, because in a waterfall sell-off is the product of the rubber band breaking. So, but it doesn't break very often, right? You don't often see that big waterfall from low levels, but we got to have that in the back of our minds. And the way I would handle that is, if you're trading on the short, say we're going to open down and you see we're going down intraday and you're tactically trading that short, go to the bank early and often, and if and when the rubber band breaks, hopefully you will be in some shorts, some tactical shorts that turn into windfalls, right? You're already short, and we're drifting lower in the morning, and then Friday afternoon, everybody and their brother decides, hey, I don't want to hold this market over the weekend. So they sell, and then the cascade starts. Well, you're already in, right? So keep that in mind. But I don't think once you see that happening, that's not a time for new shorts, trying to go in all over the place and load up, because then you got the potential for, a reversal Monday night, Tuesday morning kind of thing. So getting a little tricky down here with the oscillators extended, yet the market keeps going down. So SPY, we just keep losing these levels from above. Fresh sell signal yesterday on the fill of this gap, and then losing 375. Now the door is open to this one remaining gap right above the June lows, and then we got the June lows right down here. So I think the first bullish move would be a recapture of 375. You can see it here where, if we proceed down, we're going to run into this gap with a gap fill down at 365.86. And then we got the June low at 362.50. May see this come down here, get a bounce. What I've done is drop in a down channel on the price action off of the top. So we have a reference point on the lows and a midpoint and the upper end of the channel. And so those can be some intermediate target type points on any kind of a upswing. And I think what's interesting here is, go down, hit the top of the gap, hit the bottom of the channel, and then potentially get a bounce. Either that scenario, or come right down here, fill the gap, undercut the channel, and then recapture the channel. So we're just going to have to see how that plays out today. Same kind of idea on the Qs. We said that 285 was our main pivot. We had the large volume over price support bar here, and we just dropped right through it. So now there's a little bit of support at 280, but then we've got the gap and the June lows down here at 270 that have the door wide open for price to go through if it wants to do that. Here we've just got on the 1 hour chart where price came down yesterday and just settled on top of that gap. And that's actually a sign of weakness when that happens. Why? Because this gap had not been hit yet. What you'd expect is a decent bounce off the top of the gap. We didn't get that. It hit the top of the gap, lost downside horsepower, but no buyers showed up. So now what this looks like to me is first leg down, tight consolidation. I like to call that a flat flag versus a bear flag that works its way higher and forms that classic flag look. This is more of a flat flag. So right now you just got to watch the top of the gap, and if that breaks, that's a pretty good size gap. That's $4. So you break that, you're looking for a gap fill down towards 274.69. IWM, we had talked about 178 being our main pivot. It remains that. Bad day at the office yesterday. You can see that it lost this large high volume bar, and it came right down to this one here at 173, let's call it. Now that's going to be your pivot this morning. I've got some support in here at 168, and then you got the June lows at 164. So those are your downside targets on IWM. And remember also, at some point, I would imagine we're going to have, I mean, it could be today, could be like Tuesday next week, have a breakdown, then a back test back to 178 for a back check of this big level, right? Support, broken. Now that's resistance, you know, a breakdown, a back test. And then that sequence, if that plays out, would certainly relax the oscillators, you know, get them up towards zero. And then you lay on your short at 178 with a stop above, looking for a rejection there and a run back down towards the June lows. Just as a side note, we're coming into some very poor seasonality for the next month. You know, the mid-September to mid-October, mid to late October actually, pretty rough on the sentiment front. Or excuse me, not sentiment front, seasonal front. Bad 6 to 8 weeks in the market. If you go back, market does not perform well historically over the next weeks. So there you've got your clear pivots. Got a little refinement here. You can see also came down and then on the back half of the day just settled in here at 171. So anything below 171 I think is a short, looking for 168, then 164. And then of course on any undercut that recaptures 171, then you can buy that and see if you get a kickback rally. Meta, I dropped in another downtrend channel. You can see that we spent time at the top half of the channel. Then once we dropped below, now we're on the bottom half of the channel. On any kind of bounces, we can use these channel lines as references for support and resistance. You can see here. Now here's the classic bear flag that I was just talking about. We broke down, and then yesterday they bought it back up. Price went right into resistance here. See, support. Now that becomes resistance. So right into this pivot where it failed, and that's where you get that classic bear flag look. So I think you can be short against this, what is it? Basically 145 right in that area. And then if it breaks this low down at 141, then you got the COVID lows targeted down here at 137-ish. Apple also had the classic back test move. We came down, reached down to 151. They bought it up and then reached up, back up into resistance where that failed. So now you've got your bear flag in place. I think a break below 152.50 gives you an open door down to 150.5, and then a break there brings you back into this 148.50 at these prior lows. And just looking at it now, you could easily drop in a midpoint line between the two outside rails of the channel. You can drop it down right through here, right? I'll do that for next time. I think it's a good reference point to have that in there. Tesla turned out to be a good trade if you were ready for it. This was the final closing bar on was that right? Yeah, this was the final bar on Wednesday. Thursday, took a peek above 300 and then let go. So you had an entry here at 300. You had an entry here at 295, and then you came right into support that held. Again, this to me looks like a consolidation before a potential breakdown. And just by a measured move, you can almost visualize, at least I hope you can, that, first leg down, consolidation, second leg down. It's about the same distance from 312 to 290 as it is from 290 down here. So roughly speaking, a measured move would get you down towards these prior lows. All that in mind, you're right here at the bottom of value, so I wouldn't try to front run that. But if you get a break of 287.50, I think that would be a good short entry if you do in fact get that break. And if you got that, I think you would at least come to 280 very, very quickly. Microsoft. Here's that classic breakdown and back test. Look what happened. You had the big down move, and then yesterday it just worked its way back up into 242, but could not take it out. So if you wanted an objective short, you're right back to that pivot level at 242 with the next leg down pointing towards 235. Amazon. Held the gap at 117. So you've got a really clear pivot here at the top of the gap. They either start buying it and try to back test this 121, or this turns out to be a two-leg move. Leg down, consolidation, second leg down. Fill this gap and potentially go down towards 112. But you do have a $2 gap to fill beginning at 117. Google, this is the daily, just remains in rough shape, kind of in no man's land. I think if you get, if there's a rally that materializes whenever it does, your target's going to be 105 for a back test. And then that would be a great place to try an objective short. But as it stands now, 91.50 is our measured move downside target. Netflix lost support at 240, lost support at 238, came down into 234, which held, and then they put in a little rally up to 240 that failed. So now you've got that little bear flag look. I think you can stay short against 238. Now that I say that, well, 238 is your pivot, right? You got some resistance. And if it were to break out above 240, 240 and a half, then you got a chance for 245 and then 248. This chart still looks different than all the other ones, right? It has not broken this big level here at 234. Right now, as it stands, I think it's still a bullish chart from the standpoint of move higher, fib retracement, which is common, back to support, which held, and now moving away from support, even though it's moving away slowly. So if there really is somebody accumulating big numbers, and this holds 234, I wouldn't get too bearish. I mean, you can tactically do whatever you want to do, but if it loses 234, then I would be more inclined to put on a short looking for 228, $6 move, and then potentially another $4, making that a $10 move back down to fill the gap, and then potentially come back to these lows in the mid-teens down here. So we'll see how Netflix handles this environment. Same price action here. We lost 200, but came down to this 195 and spent the whole day oscillating there. You've got a great pivot point at 195. If it holds and tries to bounce, your first target's 200, your second target's 204, and if it breaks the June low that we had pointed out on the daily chart is at 190. Finally got the downside horsepower on ARK that we had been talking about. General market, what were the Qs down? Qs down 1.23%. ARK down 4%. So now this has clearly lost the midpoint. I would expect it to come down to 15, where there'll be a big test. And just as I'm talking here, I don't know if you saw the news, but Kathy is giving up the stewardship of two of her funds, not making the investment decisions. She's appointing a different portfolio manager for a couple of them, and I don't know which ones they are. Maybe they're flagship and fintech. I'm not sure which ones. You could go out there and find out which ones those are, but trying to get out of the crossfire before things start happening here. So ARKG has clearly broken the trading range. Now my target is 31, and I think you can stay short against 34. Flagship fund has clearly broken 40, looking for 36 more or less down here at these lows. And then wrapping up with ARKW, down 4.5%, lost these prior lows, so now it's all about 46. I would set your alarm at 46. I mean, you got a range from 46 to 59. That's 13 points. You break 46. You're looking at 33. So that is a massive move on ARKW if you get it. And like I say, with the clamps on liquidity ever tightening, I think these high valuation names, Ponzi names, bubble names, story stock names are going to end up going lower. And I was just looking at a few stocks yesterday, and I'm going to put together a list for you, but a name like Chewy, still ridiculously valued. Bros, BROS, the new coffee shop, still has a PE, close to 100. That's just not going to work in this environment. If you're going to buy a coffee shop, I don't know what the PE is on Starbucks. I know the chart isn't anything to scream about, but there'll be a point where Starbucks will be trading really low PE, and then you got a stock like Bros that's banking on growth and low cost of capital. They're not going to have that, right? So there are still a lot. My point is there are still a lot of names out there that are very rich, even after big pullbacks, right? If you see negative PEs, if you see PEs in the 100, sit up taller in your chair and find the locations where breakdowns may happen. And I think you'll get outsized moves on those names. So let's wrap it up there. Keep in mind the oscillators. Stay tactical on all your shorts. By all means, take advantage of them intraday if you can. Be ready for a bounce if the rubber band gets extended and starts coming back. Just looking at the calendar, or looking at, today's Friday, maybe it's a scenario of lower today, lower Monday, and then turn around Tuesday. If it's a bad day of selling today, chances are Monday will be red as well. So let's see how things are handled the last 2 hours of trading today as we go into the weekend. That might be a real good read on the price action and sentiment heading into the weekend. So let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.